Hi, Shae Russell here, editor of the Daily Reckoning Australia. And I wanted to make this video today just as sort of as a follow-up to what I wrote in the Daily Reckoning earlier this morning. Now, this morning I talked about how UBS says that homeowners can only borrow 20% less than what they could do 3 years ago. So what that means is that banks are reducing what they're willing to lend to people based on their income profile and their expenses. But sort of something that also came out yesterday was from domain.com. Now, they've said that 1/3 of 18 to 34-year-olds are actually struggling to get their property refinanced. So things like off-the-plan purchases and just general houses that have been bought in the past few years, their valuations are coming in significantly lower than what was the original price for them. And as a result, a lot of people are finding that they're suddenly out of pocket or that they haven't built up as much equity in their home as they thought. Now, the interesting take here from Domain, though, is that they say, or they place the blame firmly with the valuers, and they call it a experience gap for valuers right now. So they're sort of saying there's this whole generation of valuers out there that don't know how to value properties in a downturn, and that's why we're seeing these lower valuations. I completely disagree. I believe we're seeing these lower valuations because some of the hysteria has been taken out of the property market and the valuations are finally starting to reflect that. So the mania has been removed and we're starting to see more sensible pricing coming in for houses. Obviously, Domain's got the usual things to justify why house prices should be higher than they are. Low interest rates, for example, are one. Now, yes, interest rates are low, but Domain go further and say that, we know they're going to be going up soon. Again, I completely disagree. I'm not convinced that the RBA is going to raise rates anytime before 2020, and I still believe that we can't rule out a rate cut. In the meantime, that's all I've got for you today. I'll be back in touch with you more next week.